Moment, the momentum in the last couple of weeks, from what I'm hearing from you guys, is the market's shifted, right? The momentum has slowed in some cases, or it's shifted from a purchase market to more of a refinance market. And obviously with some interest rate rises in the economy and some more predicted to come up to 1.5% potentially, the sentiment and shift in the marketplace is going to potentially shift even further. But in terms of, in this point in time, to focus on the things that you can control are going to be the things that are going to be really important for you and in looking this market. So this is why I wanted to talk to you about some of the 5 ways that you can really take opportunities and turn this into a real breakthrough and your ability to take market share, position yourself as a market authority and come up trumps. It reminds me of when we went through the GFC. We were with Wizard Home Loans. We got bought out by Aussie Home Loans at that period of time. And a lot of my colleagues that owned Wizard stores were kicking the dust. It was the death of that particular business. But we saw it differently. We saw, through the changes of the GFC, we saw the opportunity that it brought. A lot of our clients were, up to 1% out of the market, and it gave us a great opportunity to get on the front foot, which we did. We got a team of telemarketers in, and we created an outbound calling team, and we generated a stack load of business in a tough market. Well, I think we did about 4 months where we did $40 million worth of applications a month, taking advantage of times of adversity. And with what's happening in the global economy, what's happening in the slowdown in some of the property markets that we're already starting to see. Yes, there's certain exceptions. South Australia and WA are definitely probably an exception to the rule, and they're continuing to go. And in Queensland as well, there's still a bit of momentum in that market. But Sydney and Melbourne are definitely starting to see a bit of a slowdown. So in terms of looking at the opportunities in terms of the marketplace and what we can do, this is why I wanted to talk about the opportunities that are going to present itself. So if we look at 5 ways to thrive in a downturn. So obviously rising rates ahead, how can we beat that and how can we get ahead of the curve? So we make sure that we're not the ones that are suffering a slowdown, that we're actually the ones that are continuing to thrive or continuing to maintain the good levels of business that we've all got used to over the last few months. So in terms of a rising rate market, I've got a note here, and if you want a copy of the 5 ways, just type below 5 ways, and I'll definitely give you a copy of this document and we can sort of talk about it and go through the plan. But you need to position yourself as a leader, and I'm going to talk to you about doing that today because there's 3 things that we should really focus on. Right? We should focus on a number of different ways. And so the way I like to think about, why should we focus on it at the moment? Right? Why? What are some of the opportunities, and then how are we going to really take advantage of these things? So if we start with the first one, and if we look at the first one and we say, the first one that we're looking at is the market. Right, so we're looking at what's happening in the market right now. So if we look at the market, there's a bit of dramatized news, and I'm a big fan of not listening to the news. It's all, they create those dramatized headlines and panic to sell newspapers, right? So, if we look at what's happening in the market at the moment, so there's a bit of panic. Right? There's a bit of panic in the market, and this is going to create fear. And fear causes people to react. I had a one of my good elite clients that I was talking to yesterday lost a client within 12 months, got a clawback because the client panicked and refinanced. Didn't let him know, and he's lost a client, right? Because listening to the fear and the panic of the headlines, he's lost an otherwise good client that he bent over backwards for, did a family guarantee, refinance, got rid of the guarantee. And so it just shows that, people caught at these moments can make reactions. So we don't want to make reactions in this market, right? Because that panic and fear causes people to become reactive. And so we want to be the people that are the voice of reasons and the authority in the market. So if we have a look at what else happens, and being in the industry for 20 years, I've been through a number of downturns, right? So what happens when the market turns down? Well, everything slows, right? So everything slows down because the seller isn't going to get the price that they want for their property, so they're not going to sell at that particular price. So they'll either take their property off the market or they'll hold out for an unrealistic price, which slows down the market. If they can't sell, it means that they can't buy, right? So it has that sort of domino effect. In a buoyant market, if they want to sell, they can sell, and then that makes it easy for them to buy. One of the beauties is there's more stock on the markets, there's more options for people like first home buyers, but generally the property market slows. And some of the other reasons that it slows is, and again, we're looking forward here, property valuations come off, so there's less opportunity, less equity for people to do what they want to do. That also happens with market slowing. The other thing that happens with rising rates is, borrowing capacity. So capacity drops. So people's borrowing capacity drops. So this is something that we need to consider, right? So this is the why, and this is looking at the market, right? So we've got a number of things that we've spoken about, right? Lowered borrowing capacity, people not selling, not being able to get the prices, holding out, buyers not willing to pay the top dollar because they know the market's come off. So there's a gap for a while. All right, so this is why the market slows. And again, so that's why the purchase market isn't as strong as the refi market. All right, so let's go to the next part and let's have a look at, well, what are the opportunities? If that's what's happening in the market, what are the opportunities that this creates, right? So right now, at the moment, with recent sales, with property valuations, the equity in your client's properties is going to be the highest that it's ever going to be. And in terms of where their borrowing capacity is at the moment, is the highest that it's going to be. So obviously there's an opportunity for clients to refinance. And we're seeing that with a lot of our clients at the moment. They're saying there's been a shift in their business from purchase to refinance business. All right, so we're looking at more opportunities for refinance. In terms of obviously the property market coming off and more properties on the market, the property investment space has been pretty tight. But in terms of with property coming off, for people to refinance and get liquidity, because cash is king, when those property investment opportunities come, they're going to be ready to pounce, right? So in terms of, and I was speaking to some professionals in the industry, and they think, towards the end of this year, there's going to be some real opportunities in a property investment space. So there's going to be opportunities to invest. And again, the more that you can provide that intel and a real understanding of what's happening in the market. And as I mentioned, there's markets within markets, and there's also some other markets that have been flat, like WA have been flat for a very long time. Vacancy rates of less than 1%, still with a median price of less than half of somewhere like Sydney or Melbourne. the opportunities for investments in places like that. And obviously, what happens in a downturn, commodities market is big. Obviously, they're driven a lot by commodities on that side. So there's potentially going to be investment opportunities if you take that broader view for your clients and have some education around what are the potential other returns around the market. So the other opportunities is it's in the media, so it's a great reason to contact, right? It gives you a great reason to pick up the phone and to contact your clients. So because of also the panic and the fear in the market, it gives you that sort of opportunity to be the market authority and really be that market expert, right? So that's another one of the opportunities is you get to be the market expert, right? In terms of, again, whether that's in your small market or in the other markets. So in terms of the other opportunities, so obviously debt consolidation is a massive opportunity, but one of the important things, the staff and the employment market has been very tight, right? If I look at, I've got some clients in New Zealand, and one of the things that they've said is there's a lot more jobs that have recently, a lot more people that have come onto the market recently because the market has slowed down to the point where maybe brokers that thought that they were getting in at the right time realize, hey, I'm better off going and being a loan processor, or there's just not as much demand for staff. So you have the opportunity of really growing your team with quality people if you're taking the right actions, right? The other opportunity is really to gain market share. And it's interesting, in terms of the market, in looking at that 70% of all new business is done by brokers at the moment. So who are you going to take market share off? You're going to take market share more than likely over other brokers. So if you're proactive and having a plan to act now, and speed to action is crucial when the momentum swings in a market like this. If you're on the front foot and really looking at taking advantage of these opportunities that we're talking about, then you are going to position yourself to actually take market share. And this is why I love these markets in terms of downturns, because if you look at the sort of opportunities, and another opportunities in terms of, and we'll get into the how, is looking at how you can grow your referral partner business and being that market. They don't want to know you when the market's booming. So for example, a real estate agent doesn't want to know you when they can just put a sign up, put it on the internet and it's sold. They don't need you. They don't need that relationship. But when the market shifts, then you've got a real opportunity to educate, right? So you've got a real opportunity to educate and be that expert within the market. So if we look at, well, how can I do it? So obviously the three key areas that you can look at in terms of education. And again, this is a time where we really want to be really close to our clients. We want to be really close to them because, with all the cashbacks and how aggressive the banks and stuff are being, if we're not talking to them about their loans, then there's going to be other people that are going to be talking to them. So really that ability to educate your clients, to secondly educate and really educate your referral partners, and talk as that voice of reason and tell them what's happening within the market. And similar to what the opportunities that we've spoken about now in terms of why is the right time for their clients. So why not speak to them about getting access to rent roll, for example, and doing a campaign where you're talking and saving their clients money and making them liquid so they can take advantage of those opportunities in the markets. So the clients, the referral partners, but then the bigger market as well, right? So whether that's your local market, whether it's your niche, whether it's the broader sort of communities that you work with. So it's an opportunity to educate the broader market in terms of what's happening. And again, you may focus on property investors. So educate your property investor market. You may focus on small businesses. You may focus on doctors, lawyers, solicitors. Whatever your market is, how can you position yourself as that voice of authority in this marketplace? So this is really, when we look at it, this is the opportunities in a downturn in terms of the things that we can do, in terms of, well, why would we do it? Why would we pivot as quickly as possible? What are those opportunities? And then how are we going to do it? Through educating our clients. So I've summarized this in terms of, some of the effects that we spoke about: lower barrier, the dramatized news, the panic, the fear, the people being reactive, the slower speed, the market drops, the lower valuations. And then how to look at, well, what are the opportunities, right? So we've said refinance, consolidate, and these are the 5 ways to thrive, right? So we want to refinance and consolidate. We want to build our referral partners. Now is the best time. Now is the best time to do it. We want to obviously talk about those opportunities that are going to present themselves from a property investment. And most markets, because all markets around the country have been growing, it's been pretty tight. But there's going to be some really good opportunities for property investment. A great way for you to, one, position yourself as a market expert and look at those opportunities. And the 5th way to thrive is to take market share. The market may not be growing, but it's still a massive, multi-billion dollar industry. So there's still plenty of business out there to go around. So they're the 5 ways. If you want a copy of this document, comment 5 ways below. But again, this has been Ross Lacane, founder of the $1 Billion Broker. I hope you got a lot out of this, and I look forward to helping you create a profitable mortgage broking business that you are proud of. I'll see you next time.